Welcome to the deep dive. So on Friday, August 8th, something pretty dramatic happened with the stock ticker AI, that's C3.AI, of course. It closed down over 2% in regular trading, which isn't great, but then after hours, wow, it just plummeted more than 14% down in extended trading. I mean, that's a really big move, especially for a company that's so tied into, the whole AI boom. So the big question we're tackling today is, what exactly went down with C3.AI on Friday? And why such a sharp reaction from the market? We're going to unpack the data, the company news, the market chatter, basically give you the clearest picture we can. Think of it as your shortcut through all the noise in this really fast-moving AI space. Let's dive in.
Okay, so to really get what triggered that big drop, we need to look at the immediate news that hit the wires that day. On August 8th, C3.AI put out its preliminary financial results. These are for their first fiscal quarter, the one that ended July 31st, 2025. Now remember, these are just estimates, unaudited numbers. But if finance, sometimes those first glimpses are, well, they're powerful signals.
Oh, absolutely. Preliminary estimates can be incredibly potent. They give the market this early look, even if it's not final, into how a company's doing. And they often cause immediate ripples, especially, like you said, when they're way off what people were expecting. And for C3.AI, well, let's just say they were pretty far off. But, it's critical to understand this didn't just happen in isolation. For weeks before this, there was already this cloud of uncertainty hanging over the company. Remember back on July 24th?
Ah, yes. The CEO news.
Exactly. The announcement that Tom Siebel, the founder, the longtime CEO, was stepping down. Markets just hate uncertainty. And you put together disappointing early numbers with a major leadership change like that, it creates a real vacuum. Investors get nervous.
Okay, so let's zoom in on the specific preliminary numbers for Q1.
Yeah.
How bad were they, really? What jumped out?
Well, the top line, the total revenue, came in somewhere between $70.2 million and $70.4 million.
Okay. And what were analysts expecting?
That's the kicker. Estimates were closer to $104.3 million.
Wow. That's not just a miss, that's a huge gap.
It really is. A massive shortfall, and that immediately signals trouble. Then you look further down. The GAAP loss from operations. That was between about $124.7 and $124.9 million. Negative.
Okay, big loss on a GAAP basis.
Yeah.
What about non-GAAP, which sometimes looks a bit better?
Still substantial. Even excluding things like stock-based compensation, the non-GAAP loss from operations was between $57.7 million and $57.9 million. Still a pretty big number. Now, on the plus side, they did report having a decent amount of cash. $711.9 million in cash, cash equivalents, and marketable securities as of the end of July.
Right, so nearly $750 million in cash provides some cushion, but those ongoing losses, even non-GAAP, that's still a bit of a red flag for a growth company, isn't it? That burn rate seems high.
It absolutely is a concern. I mean, $711 million is a good safety net. But yeah, burning through cash with losses like that isn't sustainable long term. Investors look at growth companies and they expect losses sometimes, sure, but they want to see a clear path to profitability fueled by rapid growth. A high burn rate suggests maybe that path is getting longer or maybe rockier than people thought. It definitely puts pressure on them to show how they'll turn things around, either boost revenue fast or cut costs significantly.
And like you said, this wasn't the only shock. That huge revenue miss landed while the market was still trying to figure out the leadership situation, the founders stepping down. Tell us a bit more about Tom Siebel's departure. It seemed quite sudden.
Yeah, it did. Tom Siebel, he founded the company back in 2009. He's been the CEO the entire time, very much the face of C3.AI. He announced he was resigning for health reasons, specifically mentioning hospitalizations and some vision impairment. Now, a founder CEO leaving is always a big deal. But when it's unexpected like this and there isn't an immediate successor lined up and ready to go, it creates what people call a leadership vacuum. Lots of uncertainty for the market. They did say he'll stay on as chairman, and they've hired a, quote, internationally renowned search firm to find the next CEO. But still, the immediate reaction was, well, significant.
And the market definitely reacted even before this latest news, didn't it? Since that CEO announcement on July 24th, the stock was already feeling the pressure.
It was. By the Monday after that news broke, the stock had already dropped more than 20%. And this, just adds to a really tough longer-term picture for C3.AI shareholders. Stock has unfortunately nosedived. It's down over 75% since its IPO back in late 2020.
75% since IPO.
Ouch. Yeah. And just looking at this year, 2025, it's down over 30% year to date. So investors were already sitting on pretty significant losses, feeling quite nervous even before this August 8th news piled on. That pre-existing weakness definitely amplified the drop. Now, if we try and connect the dots, You've got these lower than expected revenues, right? Well, buried in those preliminary results was a mention that C3.AI had just finished restructuring its global sales and services teams during that first quarter.
Ah, restructuring. That can often cause disruption.
Exactly. And what's really telling is that Tom Siebel himself admitted it. He acknowledged that this reorganization, quote, disrupted sales momentum.
So a direct admission that internal changes hurt the numbers.
Precisely. It wasn't just some external factor. They pointed to an internal cause for the miss. That's significant.
And to try and fix that, or at least stabilize things, they brought in some new executives as part of this reshuffle.
Yes, they did. They appointed Rob Schilling as the new chief commercial officer and John Kitchingman as the EMEA general manager. Alex Amato is now overseeing customer services too. The clear hope here is that this new team can, get things back on track, fix the sales disruption, and start turning those customer agreements into actual revenue more effectively. Their execution is going to be absolutely critical now.
Okay, so that's the internal picture. Missed targets, leadership changes, sales restructuring. How was the wider market looking at C3.AI before this August 8th bombshell? What were analysts and the big institutional players thinking?
Well, it was definitely a mixed bag, which honestly often signals that underlying uncertainty we talked about. If you looked at Wall Street analyst ratings, the consensus was basically a hold. Out of 15 brokerages covering the stock, you had 4 with sell ratings, 6 hold, 4 buy, and just 1 strong buy.
So pretty spread out. No strong conviction either way, really.
Exactly. A lot of division. And that showed up in their price targets, too. The one-year targets ranged all over the place, from a low of $22 a share to a high of $50. The average was around $29.79.
That's a really wide range.
It is, especially for a company in AI, which is such a hot sector. It just underlines how differently the experts were valuing its future, given all the headwinds.
Now, here's where things get, I think, really interesting, maybe even a bit concerning. Insider activity. What were the people inside the company doing with their stock? In the last 6 months leading up to this, C3.AI insiders made 46 sales of company stock. And you know how many purchases they made?
Let me guess. Not many.
0. 46 sales, 0 buys.
Wow. Okay, that definitely raises some eyebrows.
It gets more specific. Thomas Siebel himself, the CEO, sold over 4.1 million shares in those 6 months. That's worth an estimated $103 million. And more recently, he sold another 336,000 shares at an average price around $22.77. That single move cut his direct ownership by over half, 50.92%.
A 50% reduction in the CEO's holding?
Yeah. And other executives were selling too. Just in the last 90 days, insiders sold nearly 2.3 million shares, netting over $58 million.
That paints a difficult picture. I mean, when you see such consistent heavy selling from the inside, especially the CEO shedding such a large part of his stake, and nobody on the inside is buying, it sends a pretty strong signal, doesn't it? It suggests a lack of conviction, maybe, in the company's immediate prospects.
It certainly raises that uncomfortable question, like you said before. If the insiders aren't buying, why should outside investors?
Exactly. It can really erode trust.
Okay, let's layer on another piece of market data. Short interest. This is basically the number of investors betting against the stock, betting the price will fall. As of mid-July, so before the August 8th news, C3.AI already had 24 million shares sold short. What does that level of short interest tell us?
It tells us C3.AI was already a very heavily shorted stock, a big target for bears. We can look at the short interest ratio, or days to cover. For C3.AI, it was 3.9 days. That means, theoretically, it would take almost 4 full days of average trading volume for all those short sellers to buy back their shares and close their positions.
So a lot of people were betting against it.
Yes, about 17.88% of the available shares were shorted. Now, sometimes a high short interest can lead to a short squeeze if good news hits, but more often it means the stock is really vulnerable to bad news. Negative news, like those preliminary results, is like fuel for short sellers. It confirms their bet, encourages more shorting, and can really amplify a stock's decline. That pre-existing short interest definitely made the August 8th drop worse.
And even the big institutional investors, the hedge funds and mutual funds, they seem divided too, right? Looking at Q1 data.
Yeah, it was another mixed signal. In the first quarter of 2025, you had 189 institutions adding C3.AI shares, but almost as many. 185 were decreasing their positions. You saw some big names making moves. Goldman Sachs, for instance, massively increased their stake by over 637%.
Wow.
But on the other side, you had firms like Voya Investment Management, SquarePoint Ops, Two Sigma Investments. They got very large positions entirely.
So a real tug of war among the big players as well. Lots of disagreement on where this is headed.
Absolutely. Deep divisions. Okay, so despite all these immediate financial worries and the leadership questions, it's probably worth reminding ourselves what C3.AI actually does. What is their core business?
Right. They're fundamentally an enterprise AI application software company. So they build and sell AI tools specifically designed for large businesses. They've got a few main offerings. There's the C3 Agentic AI platform that's a tool set for companies to develop their own custom AI applications. Then they have C3 AI applications. This is more like a portfolio of ready-made, industry-specific SaaS solutions, things like anti-money laundering tools for banks, CRM software, energy management, healthcare apps, inventory optimization, quite a range. And importantly, they have C3 Generative AI.
And they serve a really wide variety of industries too, don't they? Manufacturing, oil and gas, finance, defense, healthcare. It's not like they're stuck in one niche. Not at all. That breadth shows the potential applicability of their technology across the economy. And their focus on generative AI is particularly interesting right now. The company mentioned having deployed it in 17 pilots. They've even said they view generative AI as being like the internet circa 1996. So they clearly see it as foundational, transformative technology.
A big bet on the future there.
A huge bet. And they seem aware of the challenges, too. They talk about working on the hallucination problem, where AI makes things up and the big security risks that come with these powerful models. So it shows they're thinking about not just building the tech, but making it reliable and secure enough for serious enterprise use. That's crucial.
And even with the recent bad news, there were some underlying strengths visible in the earlier Q1 FY25 data, weren't there? Like the number of deals they signed.
Yes, that's a really important point. In that first quarter, C3.AI reported signing 71 agreements, and 52 of those were pilots. That actually represented 122% year-over-year growth in the number of agreements. So demand, or at least interest, seems strong.
Okay, so lots of deals being signed, even if revenue isn't following immediately.
Exactly. And they still have that strong cash reserve, $762.5 million reported earlier. Plus, they actually generated positive free cash flow in that quarter, about $7.1 million.
Ah, positive free cash flow. Even a small amount is significant given the operating losses, right?
It's very significant. It suggests that underneath the GAAP and non-GAAP losses, there's some operational efficiency. The business is generating some cash internally and means they aren't just burning through their reserves. That positive flow, combined with the strong growth in agreements, shows there's still a pulse. There's still a pipeline, even if converting it to revenue is the current big challenge. So if we try and tie all this together, looking ahead, what does C3.AI need to do to recover? What's the path forward? I think it boils down to three key things, especially in this very dynamic AI market. First, leadership execution. That new commercial team has to stabilize sales. They need to get better and faster at turning those agreements you mentioned into actual recognized revenue. The AI sales cycle is tough. They need to prove the ROI clearly.
Okay, execution on sales is number one. What's next?
Second, product innovation. They have to keep pushing forward, especially with their generative AI suite. The AI space moves incredibly fast. They need to constantly innovate to keep customers, win new ones, and really stand out from, both other software firms and the big tech giants, even open source models.
Right, stay ahead of the curve.
Yeah.
And the third factor?
Third is financial discipline. They just have to get those non-GAAP losses under control. Improve cash flow efficiency. Investors in the AI space want to see scalability, and right now, that prolonged high burn rate, it looks unsustainable. They need to reassure the market they have a credible path to profitability.
So execution, innovation, and financial discipline. That makes sense. For you, the listener, someone tracking this space, maybe even thinking about C3.AI, what's the takeaway? Analysts seem to be saying cautious hold.
Yeah, that seems to be the consensus. It's widely viewed as a high-risk bet right now, a speculative AI investment. Essentially, the market seems to be saying, prove it. Show us you can execute under new leadership. Show us the path to profit. Then maybe we'll get more enthusiastic.
So what are the key things to watch for next?
Definitely keep an eye out for September 3rd, 2025. That's when C3.AI is expected to release its full audited financial results for the quarter ending July 31st. They should also provide an update on their guidance for the rest of fiscal year 2026 then. That forward-looking statement will be crucial.
And the CEO search, presumably.
Absolutely. Any news on the CEO search timeline or potential candidates will be watched very, very closely. Getting permanent leadership in place is critical for stability and strategy.
Okay, so we've really done a deep dive here. We've looked at the preliminary financials, the shock CEO departure, the sales restructuring, and all those mixed signals from analysts, insiders, and the short sellers. That big stock drop for C3.AI on August 8th wasn't just one thing. It was really a perfect storm of all these factors hitting at once, painting this picture of a company definitely in transition, facing some serious headwinds.
So maybe the final thought for you to consider is, what stands out most to you in all this? How do you personally weigh the incredible promise of AI technology? And C3.AI certainly has potentially powerful tech against the immediate realities of a company's financial performance, its leadership stability, especially when there's just so much uncertainty in the air, not just around the company, but the whole AI market right now. It's a tough balancing act.
Indeed it is, and this story is definitely not over. We'll be keeping a close eye on how C3.AI navigates these challenges ahead.